Hello, and welcome to today's update. Today is 29th of October. We're going to talk about what happened to the market this past week and what's likely to happen in the coming week. You're looking at a daily chart of S&P 500. S&P 500 was up 2.46% to close at 39, just over 3900, and Nasdaq 100 was up 3.17% to close at 11,546. Now it was a roller coaster week. The market was up on Monday and parts of Tuesday, and then Wednesday, Thursday, market fell because of weaker than expected earnings from Microsoft, Google, Meta. But on Friday, market reversed after, even though Amazon reported weaker than expected earnings and provided weaker guidance, but Apple was able to save the day. Um, and as a result, we saw this big gain in the market, and S&P 500 closed right at an important level at 3,900. Now, we're coming to the end of this month. There's just one trading session left. And I want to make a couple of points about this month. Let me just show you the monthly chart just to see, and then we'll discuss this. You can see this green candle forming, and S&P 500 with one trading session left is up 8.8% for the month. Now, this could have been really, really ugly month, both for fundamental and technical reasons. Now, on technical speaking, see September monthly candle was a bearish candle. It closed below the previous low right here, the June low. So which means that there was all kinds of reason for bears to take control and push it lower. While they managed to push it lower a little bit, but bulls immediately gained control and reverse course. So technically there was an opportunity for bears to basically push it lower. Now, fundamentally and macro level, let's see. At the beginning of October, we had the jobs report for the month of September, which came in harder than expected. That could have pushed market lower. Then a week later, we got the CPI report for the month of September. That shows that inflation was still strong through the month of September. It came in above expectation. Bears could have taken control there also. Then the bond yields rose. 10-year yield rose from 4% to 4.35. Then that could have pushed market lower. And then this week, the earnings from big tech came out, and with the exception of Apple, all of the results were weaker than expected. Amazon, Google, Meta, Microsoft, Snap, they all reported weaker than expected earnings. So there were all kinds of reasons for bears to push market lower. But unfortunately, they weren't able to, at least not this time. And bulls were able to fight off. And you can see that so far, with one day left in the month, S&P 500 has printed an increase of 8.8%. So that is quite impressive. If you look at Dow, that's even better. Look at the green candle. It's with one day left. It's completely engulfed the previous month's bearish candle. Remember, previous month's candle was a bearish candle for Dow. Dow was up a whopping 14.4% with one day left. If you look at Russell 2000, this is Russell 2000. That's also quite a bullish candle on the back of a bearish candle in September. So that's up almost 11%. And Nasdaq 100, which is the weakest of them all, even Nasdaq 100 is up 5.24%. So the bears did manage to push Nasdaq lower, but couldn't hold on to it, keep it there. It reversed, and then it's now printing a bullish looking candle. So I'll just come back to the daily chart. So the point I'm making is that bears had an opportunity to really take the market down. Many are calling for S&P 500 to 3,200, 3,300, 3,000. None of that happened. 3,500 remains a low so far, and that's a important support level. So we'll see whether or not this is the bottom, but certainly it is a bottom for the time being. You can see that bulls are in control. You can see that S&P 500 is making series of higher lows, so that's positive. So we're now at an important level. So this is an important level. So we'll need to see whether or not this area can be broken through. You can see that this area was a support previously, and then when S&P 500 fell below this level, it then acted as a resistance. So right now we're exactly at that level. So the question is whether or not we can go through that level. So we're going to talk about where it goes, but let's talk about what can we expect next week from an from a news point of view. So let's quickly have a look at the calendar. So this is the calendar. So there are a couple of things happening which are, I think, very important. So on Wednesday, the 2nd of November, we're going to have a Fed rate decision. Federal Reserve is expected to increase interest rate from Fed funds rate from 3.25% to 4%. So that would be an increase of 75 basis points. Now, in addition to that, they're also going to have a press conference where they're going to provide guidance as to where they see the terminal rate to be. Now, in addition, after this meeting next week, they're going to have another meeting in December where they're expected to increase interest rate by 50 basis points, which means by the end of this year, the Fed funds rate is expected to be around 4.5%. So this number by the end of this year is going to go up to around 4.5%. Now, in the last FOMC meeting in September, Federal Reserve said they want to take the interest rates up to 4.75% and leave it there. So the market would want to understand whether that expectation has changed. Meaning, is the Fed now thinking of taking it even higher, maybe to 5%, or maybe a little bit lower to 4.5%, and then leave it there? So so market would want to understand. Even if they say that we want to take it up to 5%, I think the 5% is already factored into the market. And very soon we'll talk about the yields. So we'll see the 5% at that time. So that's something that's happening on Wednesday. The other thing that would be happening would be on Friday. So on Friday, what the Labor Department is going to report non-farm payroll. So it will show how many new jobs the economy has added. Right now, the market is expecting the economy to add 200,000 new jobs. Last month, the economy added 263,000. So if it comes in around 200, that would be a slight easing in the labor market. The market is quite tight. The other thing would be it will also report the unemployment rate. The market is expecting unemployment rate to go up to 3.6% from 3.5%. So if that happens, that would be in line with what the Federal Reserve is trying to do, is slow down the labor market. The other thing the report will do is show the annual rate at which the average hourly earnings are going up. So market is expecting average hourly earnings to go up at an annual rate of 4.7%, which is down from 5%. So if the report comes in line with the market expectation it will show that the labor market is beginning to weaken, both from an unemployment rate perspective, from wage increase, so forth and so on. So that would be positive for the market. So that's in store, and I think these two events are market moving events. So now let's come back to our market right here. So again, S&P 500 closed right at the resistance. I can see that the momentum indicators are moving higher. Look at MACD, it's about to cross above the zero line. Last time when it crossed above the zero line right here, it was positive. It continued to move higher, and then we got this additional rally in the market. I see that RSI has been moving higher. It's making series of higher high. In the last rally when from mid-June, you can see that RSI was making series of higher highs. It's doing exactly the same. So momentum indicators are moving higher. That suggests that this rally could go on a little bit further. So if market is able to get through this level, where is the next critical level? That's this area right here. This is the 200-day simple moving average. you see that last time when the market rallied to this 200-day moving average, it acted as a resistance, and then we got this big decline. Now, one thing I do want to mention is that market has been rallying since reaching a low of 3,500. It's been going up. So it's gone up, let's see what, 400 points. If it breaks through this level and goes to this level, so which means that the market will have gone up almost, let's say, 600 points. So this is around 4,100. So from here to here, market will have gone up almost 600 points. Now, without taking any kind of a break. Now, if you look at what happened right here, market rose from this level to around this level. So this was just around 3650. So this around 3650, and this was around 43. It was around 43. So market had rallied quite sharply, and so by the time it came to the 200-day moving average, it ran out of gas. So my concern right now is that if it goes up from this level all the way to here, this 600 point, without taking any kind of a break, this area might be tough to break through. This is an important area of resistance. So ideally, what could happen is that if S&P 500 could basically kind of chop around, go sideways for a while, gather momentum, and then attack the 200-day moving average, I think there would be a better chance to go through this level, because this area, has been a fairly strong area of resistance. But if it's able to get above this level, there's not much resistance between 3,900 and 4,100. So this level seems like a logical level for it to go up to and retest it. And then if it pulls back, it pulls back. But if it goes straight up to this level, there is a good chance of failure here, because it will have used up a lot of firepower from 3,500 to 4,100. So I think it needs to slow down. But overall, it's looking positive. If I look at NASDAQ quickly, so NASDAQ again is also going up. I can see higher lows being formed. It's below the 50-day moving average, which is the yellow line. So that level would be the first area of resistance. You can see last week it got rejected from that level. So this is around 11,650. And then 11,700 would be the previous swing high. So if it's able to get through this level, then the 12,000 comes into play. I can see that the momentum indicators are moving higher. MACD has crossed here. It's moving higher, but it still remains below the zero line. You can see that previously when it crossed above the zero line and moved higher, there was additional rally in NASDAQ. So, so if it can get above this level, that would be positive. I can see that RSI is also moving higher. So I want to see RSI move above this previous high. So overall, it's looking positive, no doubt. If I look at Russell 2000, so this is Russell 2000, I can see that it's gradually moving higher. It looks like it wants to challenge the 200-day moving average, which is right here. And last time when it tested this level, it got rejected. So it'll be interesting to see whether or not it can go through this level. I can see that the momentum indicators are moving higher. You can see it's about to cross above the zero line. So last time when we did that and then it continued moving higher, we saw additional gain. RSI is looking good, it's moving higher. So I'm looking, so this is looking quite positive, at least on a short-term basis. Within the context of the overall downtrend, at least it's showing some bullish signs on a short-term basis. If I look at Dow Jones, I think this is probably the most the bullish looking. You can see that since reaching a low of around 28,800, it's been just going through the roof. It's just closed above the 200-day moving average. I think the next level of resistance is right here, because that will bring it, that level will bring it to here. You can see there were two big rejection. You can see from here it fell, and then from here it fell. So this would be an area of resistance. Thing is that it has moved up from this level to this here very quickly. So there is a good chance that it could pull back from this level. So this is around 33,300. Momentum indicators are positive, but they are reaching quite overbought. You can see RSI closed above 70. Last time when it reached this level, there was a big pullback. So Dow could kind of take a break at this level, but overall it's looking very positive. What's positive is the monthly chart of Dow, because you can see that it's now, at the moment, it has now closed above the monthly. It's currently above the monthly 20 period exponential moving average, and this candle is engulfed the previous months. I mean, we still have 1 day left in this month, so it could come down a little bit, but at least it's looking quite positive. So that's Dow. If we move to other markets, so let's look at the bond market and see what's happening in the bond market. So this is the Fed funds futures for April. They closed at 4.88%, was up. So it had been coming down a little bit ever since reaching the 5%. It's pulled back a little bit, but on Friday it was up 8 basis points to close at 4.88. So it's hovering around, between 475 and 5. So I think depending upon what the Fed says, I think we can get some reaction. If the Fed says that they want to take the terminal rate, I mean, it can start to go sideways. I'm not expecting a big pullback unless Federal Reserve indicates that they want to slow down. If we look at the two-year, again, it had been pulling back after reaching a high of around 464, but on Friday it closed up 14 basis points. So it's still hovering between 4.5, hovering around 4.5%. So we will get some reaction on Friday as to after the Fed, next Wednesday after the Fed announcement. 10-year, it did fall below 4% on Thursday, but Friday it managed to regain the 4% level. So it's also pulled back from the highs. So again, we'll see what the reaction is in the market after the Fed meeting, Fed announcement, and then on Friday after the jobs report. So the bond market has pulled back a little bit, so obviously that was a relief for stocks. If they pull back a little bit further, that definitely, now that the earnings are out of the way, I think the market is going to focus more on inflation and yields and rates and so forth. So I think this market is going to play a role in what happens to the stock market. Looking at US dollar, so US dollar has this upward sloping channel, so it's been trading inside this channel. Now inside this channel, I'm beginning to see a new channel being formed, which is downward sloping, because it made a higher low and it made a lower high, lower high and a lower low. So I just want to see whether or not this becomes a new trend going forward. So I'm tracking this one. I can see that momentum indicators are weakening, so you can see MACD is falling. Now MACD is now coming up to the zero level. You can see that previously when it came to the zero level, it made a U-turn and moved higher, and that basically coincided with market moving higher. So right now MACD is at close to the zero level. The question is whether this is going to be a turning point or whether MACD continues to move lower. If so, then I would expect DXY to start to move lower. RSI is again falling. It has now fallen below the 50 level mark. Previously 50 level had acted as an area of support, but it has now fallen below. So definitely momentum indicators are weakening. So we need to see whether or not it can bounce back and move to the top of the channel, or a new downward sloping channel begins. So we'll see how the market reacts next week to both the Fed's announcement and the jobs report. If we look at VIX next, so VIX continues to move lower. Volatility is coming out of the market. So it's easing some of the fears. Market is beginning to settle, and so we're seeing some rally in the market. So it has now closed below this level, 28. Next area of support is around 25, and then below that around 22, 50, 23. If I quickly look at the weekly chart, I had mentioned this a couple of weeks ago, is that anytime RSI reached on a weekly basis to this line right here, which is around 61.8, it tended to pull back. You can see right here, you can see right here, you can see right here. It doesn't like when RSI reaches 61.8 level, and that's exactly what happened. Even when it moved above this level, it was short-lived. So again, we're seeing it pull back from 61.8 level. If MACD crosses below the zero line, that would be negative. So overall, it is looking kind of weak at the moment. But on a daily basis, you can see that although momentum is still falling, you can see that it's now heading towards an oversold. So I wouldn't be surprised if we see a little bit of bounce. The question is whether the Fed announcement and the jobs report next week is going to make a whether VIX is going to rebound. If so, then obviously market could fall. But for the time being, it's heading lower. Momentum indicators are also weakening. If I quickly look at some of the sectors, S&P 500, I'll start off with XLK. On a daily basis, you can see that XLK is also moving higher. Momentum indicators are moving higher. I'll just quickly look at the weekly basis just to see what the weekly chart looks like. I had mentioned that it formed a W pattern, double bottom pattern right here. You can see that in RSI. So it has now closed above this candle. You see this green candle. It has a long wick. It managed to close above this wick. This is positive. So if it closes above these two candles right here around 133, that would be positive. If I look at XLF, that's looking quite positive. If you look at the daily chart, XLF, you can see that there was this downtrend. It has now closed above. Momentum indicators are looking positive. Weekly chart, you can see that there was some consolidation weeks right here. It is now this week's candle is quite bullish. It has closed above those consolidation area, so that's looking positive. XLB looking positive. It has now closed above this area right here. That's looking nice. XLI, that's a bullish looking candle. So next area of resistance would be around 96. XLU, that's a very strong looking weekly candle. If I look at the daily chart, you'll see that it has gone through this area of resistance. So next resistance would be right here. I can see that momentum indicators are improving. XLP, strong looking daily. Weekly, very strong bullish weekly candle. So next resistance on a weekly basis would be right here first, 74.50, and then around 77. So that's looking good. Energy XLE. So let's look at the daily chart. So we've got this channel right here. So you can see that since reaching the bottom of this channel, it has gone to the top of the channel. In fact, it's gone above the channel. So on Friday, it touched the top of the channel. Now it is overbought. You can see RSI is now around 70. Last time it came to 70. RSI market pullback. You can see that it doesn't like to stay above 70 too long. So even here when it crossed above 70 and then it pulled back. If it closes below this, if it gets inside this channel, then I would expect support to be in this area right here. And then below there, the support would be around right here, which would bring it to the middle of this channel. And it's possible that we could see some rotation out of energy into some of the more beaten down value sector. You can see some of the value sectors are still well below the near the lows. So it's possible, like XLU, XLRE, they could see some money coming into, and that could happen from XLE. If we look at XLV, strong looking chart, went through this area of resistance. Next area would be around 135. XLRE, this is the real estate. Since reaching a low, it's making higher highs, so that's looking positive within the context of the downturn. So it's moving higher. So I can see that this rally is being broad based, but I can clearly see that there is preference towards more value side. If I show you this is Nasdaq. This is a ratio of Nasdaq over S&P 500. You can see that Nasdaq has been underperforming. In fact, it's been underperforming, since the beginning of this year. You can see that Nasdaq has been falling more relative to S&P 500. If I look at the longer term chart, what it's doing is this pullback is doing it. It's bringing it back towards this long term uptrend. You can see that anytime this ratio, Nasdaq has underperformed by S&P 500. When this ratio has gone above this trend line by a certain amount, it has pulled it back towards this mean reversion, as it were. So since the COVID lows, you can see Nasdaq had really gone way above S&P 500. It has outperformed S&P 500, and all the current correction is doing is bringing the ratio back to the historical averages. And that's why Nasdaq is underperforming. But overall, Nasdaq still remains the outperformer over a long period of time. This one is going back to 2007, 2008. But on a short-term basis, definitely Nasdaq is, investors are moving more towards value over growth. So I'll leave this video right here. I want to create another video where I want to talk about some of the stocks which might be in play for next week. I think there are some interesting possibilities next week I'm seeing, so I wanted to share with you. This video has gone, it's quite long, so I'll leave it there. Well, thank you very much for watching the video. Please watch the next video where I'm going to talk about some trading ideas. Also consider sharing, subscribing. Thank you very much.